Hello, and welcome to the Wade Borth Podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome back to the Wade Borth Podcast. Today, I got special guest Joe Robert. Joe, did I read correctly? You're located in Puerto Rico, is that correct?
Well, close. Quick, I grew up in the Philadelphia area, moved to Puerto Rico in 2014. I stayed there for about 4.5 years, and now I'm actually came back stateside with a wife and 2 kids in Raleigh, North Carolina.
Raleigh, North Carolina. Love that neck of the woods. So, well, welcome, and thanks for joining me today. I really appreciate it. So,
thank you for having me on. I look forward to providing value and for all the listeners here.
You bet. So, well, just to give you a little quick background on Joe. Joe, you got over 20 years experience in alternative asset management, including startups, seed round funding, real estate, and cryptocurrencies. And so that's the part. There's a lot of things here that I want to unpack. And again, what we're looking for and what we talk about with those that are my listeners, obviously, that are IBC, people that understand the infinite banking concept and having the control of the banking function in their lives, like once we have this pool of money, where do we go with it? What do we do with it? How do we put it to work? Because like Nelson says in the book, money has to flow. Money's like water. It has to flow. And so one of the, what we're trying to do is just provide some ideas. And I think Joe's got some great ideas for people. And again, I don't endorse anything. That's a conversation you would have with Joe. But once again, Joe Robert from Roberts Venture Capitals, right? Is that correct? So, well, give me a quick highlight about what I missed in that introduction and maybe what the listeners would like to hear.
Well, sometimes it's not about timing the market, but time in the market, right?
Right, exactly.
So definitely for all the listeners, I mean, obviously we all would like to hit the perfect bottom and tops of all cycles, whether it's real estate, stocks, or anything. But at the end of the day, I think it's a matter of being consistent and participating in a growing and emerging asset classes that, have that growth over the next decade. And that's probably more important than trying to time the market.
Exactly. To that point, Joe, what I teach my clients, what we have a lot of discussion around is in order to make the infinite banking concept successful, it takes 3 things. It takes time, it takes money, and it takes discipline. The time and the money, actually, I think they're easy things. It's the discipline that I find most difficult. It's because that's something internal that I can't show you. I can't put on a spreadsheet or a calculator. It's just something internal that you either have it or you don't. And you can learn it, but it's something that's probably the most difficult thing for people to have. And that's probably the same thing with your business, the discipline to know, when to get in, when to get out, when to stay, when to have the right approach. A disciplined approach is typically usually very, very profitable to people.
The longer time horizon that you've been an investor for, typically the more mature you become and the better you get at the game, right? So when you're young, You're typically thinking about how maybe rich you could get quickly, right? And therefore you tend to emotionally make a lot more mistakes. And as you get older, you're more about trying to compound that on an annual basis more consistently for longer periods of time. And hopefully you learned a lot of your mistakes by then, in your earlier investing career.
Right. Yeah. So it's true. It's like people that want something quick typically get quick results, either good or bad, right? Some hit positive, and if you want quick results and you don't have the discipline, the majority of them I would say are typically negative because it's all driven by emotion. Emotion is a lagging indicator, at least in my thought process.
Yeah, I agree there. I totally agree.
So now I understand that, one of the areas, a couple of different areas, but one of them I really want to touch on is this idea of, you started investing in cryptocurrencies back in 2017, if I recall correctly.
That's correct. Fall 2017. So it's been over 4.5 years now, almost 5. Jeez.
Almost 5. Yeah. So what drove you there? I mean, I've looked this has been of interest of mine. I can't say I understand it well enough to talk even halfway intelligent about it, but what drove you there, or what captivated you? What made you run that direction?
Well, a few things here. So I'll back up and, I've been a real estate investor for 20 years now and have invested in over 200 properties. And also 2011 to about 2018, we were buying distressed mortgages that were originated in 2000. So my background has pretty much been as a contractor at an early age, and that led to fixing and flipping properties into a real estate investor, right? And so most of my career has been on that side. While residing in Puerto Rico in 2017, I met some people in the blockchain and crypto side, and they just kind of introduced me to what is kind of occurring there and understanding what is happening in the world. Meaning, like, if we look around and you see that you're spending all your time on Facebook, on your phone, people are driving with their phone, right?
Right.
You're taking an Uber. I mean, you're looking at all these business models where people are trying to apply technology to it in some fashion, right? You start to understand and look that, hey, over the next decade or 15, 20 years, this trend is only going to continue. So, when you hang out in this space, like, you just have energetic, young developers in that just, I don't know, they kind of just bring you in, and there's a lot of excitement. And when it comes to technology, I think there's the growth potential in this industry in the next 10 to 20 years is greater than most of these other assets. A lot of the reports that we have when it comes to the blockchain sector is at least a 50% annual growth through the end of this decade, where maybe real estate's 5, S&P is 10-ish. So when you're making different investments, you always want to understand what you're investing in, if that's actually a growing and emerging industry that could sustain returns or pay out, fixed rate payments if you're in a debt fund, et cetera, over the next decade. And I think that's an important key.
So, obviously, well, maybe not everybody has followed the crypto, but we've seen, it's very volatile, right? And it's, would you say crypto is for everyone, or everyone should be exposed to it?
I think that's a loaded question. I think at the highest level for everyone listening is that, there's a lot of different opinions out there how you should diversify your portfolio, right? So if I start at the basics, I think we should start there. And that is, one, you always want to be investing in something you either are aware of and know about, meaning you can underwrite it yourself in some capacity to know that your outcome is greater, right?
Right.
Or two, you maybe have referrals of other friends that have invested with these companies. Or three, you just have a great relationship with these managers, right? So you should always have either great relationships with people that you know in that industry or know what you're doing. I think that's important, because when people start investing in asset classes just because someone says you should have exposure, that's when they get in trouble.
Yeah. Goes back to The Richest Man in Babylon, the book. I don't know if you read the book Richest Man in Babylon, right? It's a great book that was written back, I believe, in the 30s even. But it basically says that, find people that know what they're doing in their industry and create a relationship with those people that know what they're doing.
Correct. Well said. That's well said. Exactly what I'm saying. It's either one, what is happening in that industry, or two, you find the right people. And if you don't have those, I wouldn't say you should have crypto exposure. Does that make sense?
Yep. I hear about it from different people, like, oh, this is what you got to do. And they have no clue what they're doing. They don't understand the risk. They don't understand the exposure. But everybody else is doing it, so they're hopping on the wagon to do it. And I always find that a little bit hair raising, because typically when your 80-year-old aunt is investing in crypto, that's when everybody should be getting out, actually, probably. But.
Correct. And when we say crypto, I think it's kind of interpreted as that volatile thing that just goes way up and down and kind of broadcasts a general thing over the industry, right? Because the industry as a whole, we're talking about Web3 technology. We're talking about software companies. We're talking about the way we're going to settle maybe securities in the future, right? It's not right. All of our investments are just not in these volatile crypto, right? We also have exposure to technology companies, SaaS companies directly. So it's not, it's more broader based than people usually are discussing.
That's a good point. I think we have a tendency to try to simplify and lump everything into one simple little package, which is never, ever the case.
Correct. So there's like all infrastructures. There's obviously Coinbase, right? That's a publicly traded company right now. That's not necessarily a crypto, but that's a national registered exchange. That could be a good investment, right? And there's many more. So it's not just crypto directly.
Gotcha. So with the crypto or even the coin-based, one of the things that we teach in the infinite banking concept, it's based off this idea of Austrian economics, right? Which is a sound money system. And there's been a real move to say, hey, and I'm going to use, again, loosely the word crypto, cryptocurrency is maybe that new sound money based system, right? That people are looking for. You can't inflate it. You can't manipulate it. It is what it is. It's worth the value somebody's willing to give for it, right? And that married with the idea of, this idea that I'm going to build reserves so I can do the banking function of my lives is really, again, people in the Austrian economic side kind of look at it as a perfect joint venture between the IBC system and again the crypto system in a very, maybe in a loose form, if that makes sense.
No, I agree. I mean, you're basically taking control of your finances. You're taking control of your own assets. You're trying to eliminate the need for more intermediaries in the transaction, correct?
Correct. Yeah, exactly. That's one of the things. And I was talking, are you familiar with Robert Murphy? He's a strong Austrian economist. And anyhow, the conversation is, all these things should be done at the you and me level versus at the institutional or government level. Whenever you add the government or institutional level, there's a lot of people between you and your money.
That's the truth.
And so the closer we can get to being at the you and me level, the better off we're always going to be. Doesn't mean it's going to be perfect. It's just better off, the better likelihood of success for us, not for the banks or not for the government.
Correct. And that's why when we say like Web3 and what people are trying to build in the industry as a whole, not just crypto, but is the also ability for you to have that direct relationship with your own clients or your own customers or whatever, without these other intermediaries taking as much of a cut in the middle as possible. And we're more connecting across these, we'll call them software networks, where we could do business, and the fees become very small compared to what they're paying right now at 30-50%.
So explain that. What do you mean by the fees being paid?
Okay, let's say a music artist, right now, a music artist, a singer. I just spoke to someone the other night at a meetup. He's like, you'd be lucky if you get 10% after everyone gets their cut, meaning the record label, person who sets up the tour. I mean, just the whole thing. They'd be lucky if they make about 10%, right?
Of all the revenue they generate.
Correct. And so similar as to, let's even take the Apple Store, right? Apple's taking a 30% cut of all sales, right? Like why was it Epic Games, right? Why can't Epic Games go directly to their customers? Why does 30% need to be taken out, right? I think that's basically how we look at Web3, is that we want to be able, people, the creators, to be able to go directly to those consumers or users of their platform without these intermediaries taking high percentage in the middle.
Gotcha. Okay. So again, it goes back to just, people, basically what you're doing is you're forcing these other entities to prove their value instead of just take their money, right?
Very well said. Yes.
I had a client who goes to a publisher to publish his book. And I said, why don't you self-publish? And he says, well, this is the value he found in it. So he's willing to give up that amount of money. But the self-publishing route actually forced this publishing company to make concessions, right? It forced them to prove their value. I'm not opposed to having people get paid for doing certain things, but as long as they can prove their value for what they're doing, right?
I agree there. I agree. Yes.
Because again, I don't want to be an expert in all these areas I want to put my money, so I'm willing to hire somebody and pay somebody to do these things, but I want them to show and prove that there's value that they're providing.
Correct. And a lot of maybe what we've seen or heard in the news the last few years is where some of these artists or celebrities in Hollywood or whatever, they get these long-term contracts where they're really locked in, and they either have to pay out royalties or whatever, and they're locked in for a long period of time. And later on, they find out it's not best fit for them, but they're usually picked up in a young 20s age or something where they're more immature and they don't really know what they're getting into long-term.
Gotcha. Yeah, that's true. That's a good point. So that's a discussion just real briefly. So how do people, if people had money in the sidelines or people had money in their system that are one of my listeners and they have these dollars set aside to put to work, I mean, what would that look like with somebody that's working with you? How does that transition over to say, hey, we can show you a process of how to take advantage of certain opportunities?
Yeah, I mean, so what we're doing right now and what we're going to be providing our clients is a fixed rate return product, right? We chose this avenue because over the last 10 years, I've done it with another fund that we did in the past. We offered to other clients, and I did it with another partner where we paid out fixed rate return, and that's what fit their model the best, right? So we're offering a 36-month term at a 10% annual interest rate, and the ability to auto compound that would increase that rate. And that's backed by the portfolio of different assets within the strategy that we deploy.
Gotcha. So So if they want to find more about, if this is of interest to somebody, if somebody's listening to this and they go, hey, this is something I want to learn more about, and I want to talk to Joe, how do they reach you? And I know it's going to be in the show notes, but I want to give you just a chance for a little bit of commercial here. So.
Yeah, not a problem. So you go to our company's website. That's robertventures.com. You could schedule a call there. Credit investors only for the fund aspect due to the regulations in the U.S. at the time. Right. Yep. Hopefully, we all hope it changes in the future to allow everybody, but you could book a call with me and speak to me directly there. Also, I mean, look, if you just want to kind of get a highlight to what's happening in the industry as a whole, we have a weekly newsletter at joerobert.com. Subscribe there. We send out an article every week along with tweets and a podcast with projects in the industry that we interview. So you get an idea of how we ask questions and how we underwrite them if you want.
Right. So these are just for accredited investors. Somebody that's not an accredited investor, is there an avenue for them as well, or not yet?
So right now, what do we have available? We have subscribed to the newsletter. Probably in July, we are planning to do like a 4-week series a little bit on due diligence in the space. We're going to go live. That'll be posted through our newsletter and through our social channels. At some later date, we may look at doing some type of cohort or like a hands-on type of thing. But at the moment, kind of constrained with how much you could do, right?
Right. Yep. You play by the government rules, right? That's kind of the whole thing. So.
Correct.
Play in their field, you got to play by their rules.
No, I agree. And for everybody, we hope that does change over the next 5 or 10 years, but we'll see how the lobby you guys do.
Right. So obviously the crypto is something that caught my interest just because I'm wanting to learn more and understand it more, just because I get a lot of questions about it and just I'm always a big believer in reducing your ignorance wherever you can. And so part of what I know it's going on, it's part of our world. It's going to be part of our world going forward. So the more I can understand it, the better off I'm going to be. And that's one of the reasons. That's probably why I started there, and maybe didn't start at the very beginning.
Yeah, and there's more companies that will be coming online that will go public, right? And I think as that becomes available, more people can participate in those companies from the public equity side. From the private side, you have the crypto, and then there's also funds that may specialize in those direct investments in the venture side or the equity side in the technology companies. And so it's just not, you don't have to just run and just buy crypto and being the most volatile thing. There's a multitude of ways to participate. And it just depends on your risk appetite and where you feel comfortable.
Gotcha. I'm typically never been a big fan of funds because again, my conditioned thinking has me just thinking like traditional mutual funds, right? Where there's, what's the saying? There's more mutual funds than there are actual stocks in the world. And so it's just a repackaging of everything that's out there. And then everybody gets, again, goes back to our earlier conversation. Everybody's taking a cut, and I'm trying to figure out what's the value because, when one goes down, they all go down. And so it just, but you make a case for funds for people that are, that A, want some diversification, but B, also want the ability to put in money and not have to fund a whole project. Is that my understanding?
Yeah, correct. And I look at it two things. I always like to look at there's the expert and non-expert, right? And what I mean by that is, one, you should either become an expert in what you're going to invest in, or you should let someone who's an expert do the work for you, right? And so even for myself, I want to say I'm even invested into maybe 8 or 10 other funds in this space, right? And because, like I said, the space is becoming so broad, there's DeFi or finance, there's gaming, there's metaverse, there's many different assets or many different ways you can invest. There's the equity side, the venture side, et cetera, that I can't even personally cover it all, right? So we kind of focus in a few different areas, and then we go out and find other people in those areas and other teams that we also invest in them to get exposure to that area that we believe in the next 5 years that will do very well.
So in other words, you're getting a stable full of experts to help you serve your clients and yourselves the most efficient way possible.
Correct. And like going back to our earlier thing is that you want to also, as a team, be running your own thesis on where markets in general are going in the next 5 or 10 years. And this is across the board, whether it's real estate, blockchain, or oil and gas, right?
Right. Yeah.
You want to know where the market is going, right? And so if you know that you want a tailwind or a headwind, if you have a headwind, right? So if you got tailwinds in this area, and you think this is going to outperform, then you might want to say, okay, how could I get added exposure here for that portfolio? Because our thesis is saying this is where the market is going.
Gotcha. Yep. I would agree. It's, again, I'm not a the person that wants to avoid paying people for their expertise. I just want to make sure I'm getting the value I need for it right at the time. And it goes back to either you understand that marketplace and you become the expert, or you hire or partner with somebody that understands that marketplace. Because if you don't, then it's just speculation. It's all it is. It's like I think about it going back to the early 1900s, and somebody's going to go out wildcatting for a well. They just kind of walked around across some ground and says, "I'm going to drill here," right? And they spent thousands of dollars to end up with nothing. And the person that hit it big because they had no expense into it, but the majority of people ended up poor. It's like it's if you think about, look at history and go back to the gold mines in California, the gold rush in California, or the gold rush in Alaska. Very few people ever made money. The people that made money were the shopkeepers that sold them all their equipment. But you heard about
the picks and shovels.
Right, the picks and shovels made money. The people that actually had claims, I mean, 1 out of 10 maybe made actually money, made big money, and that's what everybody saw. So you either hire people that know, get the geologist that understands where oil's at and pay him a good amount of money to maybe not insure, not guarantee, but at least give you a fighting chance to be able to come out on the winning side. And so that's the whole idea, is that understanding that when we hire people, when we bring people under our stable, it's to help our knowledge and our understanding and give us a better percentage of success.
Correct. And, for everyone listening, just to kind of reiterate our thing that we're trying to say here is that you want to, whether you're investing in real estate, blockchain, crypto, whatever the asset class is, you want to be investing in a space that's growing somewhat exponentially or at a higher growth pace over the next 5 to 10 years based on your own thesis or reports that exist out there.
Right. Yep. Yeah. You got to be paid for your risk that you're taking. So.
Correct.
So crypto might not be an avenue for everybody, but it is definitely something that if somebody goes, hey, I need to know more, I want to learn more, I'm just encouraging you to go educate yourself, have a conversation with Joe, have a conversation about what's of interest to you and see if it fits for you. But there's also, I have a lot of clients that do real estate investing, and I know that's probably a big part of what you do too. And we kind of skipped over that, and I want to keep that because that's probably the biggest part of what you have as far as what you guys do, correct?
So it has been over the last 20 years, but over the last couple of years has probably actually gone the opposite way, meaning probably more of what we actually invest in today is on the blockchain technology side, being the reason that we probably bought most of our real estate assets in the 2011 to 2015 range. And over the last few years, obviously, we've seen the biggest growth. And, when we forecast out over the next 10 years, real estate will always be a good investment in some aspect, right? But it always goes through cycles. From a return perspective and where the market's going in the next 10 years, we just see a greater opportunity in this blockchain space than we do on the real estate side.
Gotcha.
Does that make sense?
Yep. Well, but they don't have to be one or the other, correct? I mean, there's obviously some real long-term benefit to again, with my clients and what we've talked about and what I teach all the time is like, think long-term. Is there still a space in real estate that says, hey, for that person that says, I want to own some real estate for the long-term benefits, for the stability of land ownership or property ownership, not necessarily land, but property ownership? Do you think there's still a space for people to get into there?
I believe, yeah, there's always an opportunity out there. It depends on how willing you are to go out and dig that up, right? And you make the money on the buys, usually they say, right? So you got to be able to find the right opportunity. There's always going to be something out there. I think real estate is always something great to invest in. And yeah, I'm not saying to ever invest in one asset class over another, right? It's always back to that. Know the people, build the relationships, understand where that market is going in the next 5 or 10 years. So adding real estate to your portfolio, I think, is still a great option.
Gotcha. Okay. And that's something you guys still do now? I mean, you still have a portion, although it's become a smaller part of your business?
It's a lot smaller, and we are occasionally looking, but it's, we were kind of more of a distressed, opportunistic buyer, right? So we bought a lot in this probably 2011 to even up to 18. And because that market has kind of disappeared with how well we're doing in the economy, there's just a lack of deals from our relationships in which there's a price that makes sense for us to purchase.
Mm-hmm. Do you see that? Obviously, like you talked about real estate being in cycles. Just personally, my own real estate, I look at it as like maybe now's the time to get out because we've owned it for a number of years, probably like a lot of people, especially in the investment world. But having and this is one thing that I've strongly believe in. It's what we do in our family. It's what I teach my clients, is having that money, that reserve money ready to go. So when prices, roll over, and then also now we're going to find distressed properties. I mean, you go back to 2011, who are the people that were making all kinds of, who were taking advantage of opportunities? Those that had access to cash, right?
Correct. It's all, whenever's the best time to buy will be the hardest time you get cash or financing. So if you just go off of that metric, you'll probably understand the cycles best.
Right. And so that's one of the things we talk about controlling the banking function in our own lives, is that, it's funny because there's the old saying that banks only lend you money when you don't need it. And there's a point to that as well, right?
That's exactly. And that's why we kind of look at, right now, it's harder to probably, the prices are kind of down, we'll call it, in the crypto market, but that's typically, leaning towards a better opportunity in time to participate if you look out a 3 to 5 year time horizon.
Right. Yep. And then again, just having that cash available to put it to work. And when I say put it to work, I mean, it still have to be prudent with your money. It's not like you can, there's still people that lost money in, 2011, 2012, 2013, because again, they weren't educated. They weren't working as a professional. They didn't know what they were doing, but again, having access to cash is probably the most important thing. Talking to all my real estate investors, that's the thing that they grab up on the most, is like, hey, I got to have access, people with access to cash. And where we start in our teaching is like, build your cash reserves and then put it to work once you have that cash reserve set up to take advantage of opportunities. And
I agree.
And it's not just, throwing money at everything that kind of comes along. Let's be smart and prudent about it. Just because you have cash doesn't make you rich. It's what you can do with it when you have availability. Because in Nelson's book, Becoming Your Own Banker, he talked about when you have access to cash, deals won't just find you; they'll beat the door to you when you have access to cash from nobody else is giving out.
That's true, and I agree. And I mean, the longer time horizon you have when it comes to investing, the less risk you kind of take on, and the better decisions you make, right? So if you think 3 to 5 to 10 years out, especially maybe when it comes to real estate, as you mentioned, if you sell today, you might have a taxable averse. Maybe you just refi if you think 5 to 10 years out that property is located in a great location and there's more potential on the upside, right? Yep. That's how you got to kind of look at it. It's not always, you don't always want to extract the equity from a sale, because then you might have taxes, and you might actually be giving up a good asset or a great asset to maybe go on one that's not so great.
Correct. Yeah. When you sell and buy into something else, you have to make 2 right decisions versus just the 1 right decision, right?
Yep.
So are there other things that you guys do? You talked about the digital assets and becoming more of what you guys are doing. Real estate's becoming less just because of when you bought it, divesting that part of it. The other things that you're doing.
That's probably it today. I mean, we basically are just focused. I mean, we're probably, we're like 90% focused here on the technology and digital asset side. And really why is because we think that this is no different, right? As I mentioned earlier, technology and digital assets are going to pour over to these other areas where it's going to actually come together. And what I mean by that, well, maybe in 10 years, you're actually being able to trade security tokens on a private placement of a real estate deal, right?
Gotcha.
So a lot of the infrastructure projects that are also coming in are setting that up for people to be able to trade these security tokens later on. We actually think that, or I think that a lot of this market's going to be actually driven by security tokens more in the future than it is today. A lot greater percent. I mean, just going to create liquidity for these different assets. They'll be settled on these distributed ledgers instantly in real time. You'll be able to get loans instantly real time. And I mean, I think we're just, like I said, we're going more digital across the board.
Yeah. And do you see, to that point, do you see larger institutions starting to go that way? I mean, I do, but I just want, your take is, so here's an example is that, so what we do is we help obviously people take control of the banking function. The tool we use is properly structured whole life insurance to make that happen. And part of the reason why it makes a lot of sense is that you look at Bank of America, right? They got $25 billion in properly structured life insurance in their asset portfolio, of assets. And so I mean, right there, just say, okay, if that's what the banks are doing, if that's what the large institutions are doing, why shouldn't I be at least considering that idea? Do we see large institutions now, or at least getting to the point where they're saying, hey, we're going to start transacting in these digital assets as well? Maybe that's been going on a long time. I don't know.
It's been, I don't know. Everyone's got a different thing. Let's say it's been being semi-tested in the last 24 months, meaning different firms are setting up accounts. They're playing in a sandbox type environment, right, where they're trialing different things. There's definitely some institutions that have already participated, like Mass Mutual has bought, I think it was 100 million in Bitcoin, right? They've done that. And so they're playing around. What the biggest amount of money sitting on the sidelines is doing is waiting for the final laws around exactly what tokens are securities and how they're going to be regulated and et cetera. I talked to someone at Mass Mutual, I have a relationship. He's like, look, as soon as that is done and completed, like we could offer these products to our clients. Until that, framework is put in place, we can't. Right. So that just tells you that all that money can't access these assets quite yet.
Again, because some government regulator wants to either hold up the process but to the large corporations, I understand where they want to be at, because they have an obligation to their shareholders. They have an obligation to their people that own their company to do the most prudent thing. It might not, and again, it's not always. If we can get in ahead of large institutions, if that's where they're headed, sometimes that's a great place to be, because they'll float a lot of boats just by doing what they're doing.
Correct. And we're gonna get there. I mean, people don't realize, however, the internet, how long it has kind of taken. But if you just look at Uber the last 10 years, I mean, look at what we have now and what happened in 10 years, right? Right. I'm pretty bullish that when we look back at when we're in 2030, we're going to look back at this last decade. I believe there's going to be massive changes across the board to a lot of different things, right?
Yeah, 100% agree. And, there's an old adage that says change is inevitable, growth is optional. The question is, how are we going to grow within that marketplace? It's going to change. We can either fight it, we can ignore it, or we can say, hey, how do I embrace this and how do I profit from it?
Correct. And I mean, a lot of, when you remove intermediaries, make things cheaper, and you can make things more efficient, and you can create a path of least resistance for that user or consumer to go that way, things will occur. And so that's kind of what's being done right now.
Yeah, I would agree. Again, it's getting down more to the you and me level. There's still some people in between us and our money and where it needs to go, but there's fewer. A lot. I see it going to be a lot fewer. It's going to be more efficient. There's going to be less friction with the ability to transact immediately and directly.
Yep, so. And everyone with has the ability to gain access to all these different investments, right? Through their infinite banking system, right?
Yep, exactly. So, well, Joe, I appreciate it. I mean, I really, it's got my mind going, right? So I'm thinking, here's an opportunity where I can maybe have a completely different discussion with you, or even anybody that's in that space, say, how do I take advantage of this from a long-term perspective, short-term and long-term perspective. Again, if people want to get a hold of you, it's going to be in the show notes, but also just real quick, if they want to reach out to you, what's the best way for them to reach you?
Yeah, I mean, just everyone listening, newsletter where, we give you insights every week, joerobert.com. And in regards to our company, our fund, what we're offering, if you want a credit and want to set up a call, robertventures.com.
robertventures.com. Great. Well, again, thank you so much for your time. Hopefully this, for the listeners that are out there and catching this, it sparked your imagination, right? Started to get you to think maybe outside of the box that you've been thinking in the past, and get you to at least consider some possibilities that maybe there's something bigger and better for everyone out there. And again, Joe is a person that has been working in this space, and could it be a resource for you? Reach out and find out if he is. So again, Joe, I appreciate your time, and we'll be talking soon.
Wade, thank you very much. Appreciate having me on.
Take care. Bye-bye. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button, and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family. that we can be easily found on Apple Podcasts and Spotify.